Welcome to Momentum Monday. Today is November 13th, 2022. Howard, are you in San Diego? Where are you right now?
I'm in San Diego. I'm on the run.
On the run?
Chasing my crypto.
You probably need to go to Bahama and Argentina for that.
Yeah, did you follow the story? I mean, you're not that interested in it, but did you follow the story?
Oh yeah, I'm following the story. It's fascinating. It's just, it's like a movie, basically.
Yeah, I'm hearing that Michael Lewis has already been following him for 6 months. Like there's some kind of book being written, which is kind of creepy. If it's true, because Michael Lewis is not a dumb guy. And so I can't imagine Michael Lewis wouldn't have some inkling of that there was some sort of problem. So it's all kinds of drama. I expect this to, I don't know, much like Enron, this will take, I don't know, years. It's weird in the world of, I think this is if we think about Twitter, it was around during, the Lehman, Twitter was around, but now it's mainstream where you have, Sam and the employees on Twitter kind of talking about things in real time. Anyways, it's hard out to people that, it's just the way he sucked people in, both with the technology and the marketing, if you really think about, from Major League Baseball to, the stadium, to the athletes, and more importantly on the technology side, they bought a company called Embed, and they built their own, StockTwits was connected, the pipes, so people could trade crypto. So all kinds of sites around the world were connected to the pipes of FTX. So in the end, it was like evil and genius in the sense that technology-wise, he was figuring out a way how to connect everybody to the FTX pipe, and the money was just going out the back end. So it's kind of a miracle in many ways that this thing broke down when it did break down.
It's fascinating.
Yeah.
It's just, I really don't understand that how for some people there's nothing like enough for them, because you could, have $1 billion or $5 billion and, in a legal way, and, have a happy, prosperous life. But
we'll find out. There's a lot of emails, I'm sure, over the last couple of years that will now surface in hindsight that'll make it look obvious, right? But in a world where the big money just didn't put in governance and oversight, and in a way where he was skirting regulation in Bahamas, because a lot of people were onto this. Just, I don't think that people could have predicted the scale. I was listening to Brian Armstrong on the All In podcast talk about, because I've talked to Sam. I've only met him once, but I've talked to Sam on my podcast, and he understood it's not like he didn't understand how the sausage was made. He came out of Jane Street, knew how to create ETFs, he knew how money flows worked. Obviously, he wasn't a good trader. Period. End of story. Full stop. Someone was cleaning his clock every day, probably Binance or other liquidity pools. So he was losing money, right? Like he was busy building a business, not trading, or whoever was trading the Alameda money was not doing a good job. The key is, how did he keep it going so long? So that'll start to unravel. There's $10 to $20 billion, if not more, missing. This week we'll start hearing about some more bankruptcies, because all these crypto companies have their money on deposit somewhere. What I don't understand, because I never did it myself, is why, for months I've been talking about T-bills and cash, and I don't know why people thought, cash at an unregulated exchange was good. We had people trying to get 15% at Celsius, but so the stupidity or the greed was everywhere. But what I don't understand is why people would put their hard-earned, cash and savings in an unregulated institution. And if you still do have that going on, you need to move fast and get your money in an insured, bank or brokerage account in the United States. I just don't understand why people do that. And if you really want to understand crypto, the idea is to truly own it with the secure key, which is why I never really held it, because I don't trust myself, with the storage of it. I made my mistakes out of it. As I told you, I've talked about some people were swindled. I have my money in some funds, and in particular Multicoin, they were, they weren't part of it, but they fell for, kind of the same, spell. So there will be some hedge funds that we're starting to hear completely wiped out. But I think I've been clear, like putting your own money in crypto just to trade seems kind of ridiculous. So it'll take a while. Did you have any money in any of the exchanges?
No, not right now. I don't have any exposure. And so you think that everyone should keep their money, like use a cold storage, but wouldn't that make...
Yeah, there's again, I don't, because I've just trusted. I allocated a certain percentage to some managers because I was willing to pay the 2%, as I've talked about, and versus me holding the money and deciding which coins to own. So it's kind of a simple asset allocation. Figuring out what I'm willing to lose and allocate it to the sector. At one point, it was a lot of money. And I remember, selling some Solana and Multicoin at the end of last year. But we're all hit. Like anybody who had exposure to crypto over the last few months, if you haven't been hit, get your cash out. And if you have been hit, get some cash out. And if you're using exchanges that aren't regulated, that's just, been clear from the beginning. You're not protected. So
are you saying the worst is still to come just because of the psychological aspect of just people fearing for their money and just basically running out?
Yeah, they're like Binance I think there's like a run on Binance this morning. Again, there's all kinds of rumors, right? But yeah, you're just swapping trust from one regulated to another regular. Coinbase is somewhat working with the SEC and regulators.
They seem to be winning at the moment if you look at the inflows.
Well, define winning, right? Robinhood should win too, the remaining standard, but Sam owned $400 million worth of the stock, so it quickly
10%, yeah.
So that's kind of a proxy to keep an eye on this week, because I was getting more bullish, as I talked about a few weeks ago here on Robinhood as being the only game, left in town as interest rates rise and it's hard to compete. It's hard to launch a new Robinhood product, so therefore Robinhood wins on one end. And like I said, Schwab, Goldman, and Morgan and JP Morgan have such huge valuations, they don't really worry about where's Schwab at 150 billion versus 10 billion for Robinhood. Schwab's got bigger fish to fry, right? So this is a big step back for Robinhood. You can see the volume spike. Now this could be hedge funds plowing in short, knowing that this 400 million piece from Alameda, which is FTX, is not accounted for. Like, who's going to own that stock? But quickly the stock bounced on Friday, so it should be an interesting week. But really scary. Like when something like this happens, it's really scary. But you can see, like, financials are strong, energy is strong, and money flowed into tech last week, or there was short covering. So tell me what you saw. So it's like, in one hand you had like a crypto nuclear bomb, but in the other hand, the ARK world or the QQQ had a massive relief rally. They're saying it's based on the CPI, so we'll see if it's a bear market rally or the beginning of something new. I have no idea.
Yeah, no one does, neither the market does. The market is always forward looking and is just trying to to predict the future 3 to 6 months ahead, and sometimes it's right, often it's not. So currently we are in the midst, I think, of another bear market rally. It started, the big move basically started on Thursday when the CPI, Consumer Price Index, inflation came just a little bit below expectation, like it was 7.7 versus 7.9. I think that's a really tiny drop. And the market is already pricing in only a 50 basis points interest rates increase for the December FOMC meetings, December 14th, and not 75. And this was enough to see a massive short squeeze. Definitely Thursday, Friday, the stocks that were hit the worst this year outperformed by a mile. We're talking about large cap techs like Amazon and Shopify, or very highly shorted companies that are probably going out of business eventually, like Carvana and Affirm and you, like companies that actually last week they missed earnings estimates and their guidance didn't look very encouraging. But because of that wave, short squeeze wave that lifted all boats, they outperformed, definitely outperformed. So we're in the midst of it, and I would not be surprised if we see this run continue kind of until the end of the month, November. Just see that short squeeze play out. Maybe S&P even go above its 200-day for a little bit, just to lure in some new bulls.
Yeah.
And I'm thinking that from a strategic point of view, it kind of makes sense that like a week or two before the next FOMC meetings, which is December 14th, to start seeing a pullback, a sell-off, as the market, just in case, why not take profits ahead of that FOMC, because they might actually raise 75. We don't know if they raise 50, even that's what the market is currently saying. But yes, you're right. It's definitely, no one knows if this is just not a bear market rally or maybe something more. I think it's the former, but I don't know. So I'm just playing it short term. I just take positions. Currently, correlations are relatively high, so it kind of still makes sense to just use an ETF or leverage ETF to get exposure. That's what I did on Thursday. I just bought a few of them with the stop loss of the day and just gradually taking partial profits in some of the options plays I took. But this is what's going on, and the strength is not concentrated in one field. It's almost everywhere. And solar kind of pulled back ahead of the elections, as people were thinking that maybe Congress will turn red. It didn't, and it's been on a tear basically after the elections. So there's some interesting. I mean, Friday there was a fake breakout. Yeah.
A lot of big moves. The winning stocks kind of pulled back. What did defense do?
Oh yeah, on Friday definitely we saw some like stocks that were actually doing well year to date. They kind of got hit, like defense, like L&T, like the consumer staples, like
there was a risk on. It was more of a risk on rally. Old people were chasing tech, which was good. But the question is, they're still oversold. Can Amazon rally another 20%? The question is, what would you do if Amazon rallied another?
Easily, 20%? They can go to 120, I think.
So it should be an interesting week, but there's going to be a lot of news. It's really just a creepy. It's one of the worst weeks that I can remember, even though I'm not heavily exposed to the markets, because it's kind of a gut punch. You really see the excesses of the last 10 years showing up in these weird ways, right? Like it was venture, people in my industry, venture capitalists, it's not so bad, the letters from Sequoia. It was kind of flippant. Sequoia put out a letter that, we've lost 200 million in FTX, but we're up 7 billion. So it's more like this is just normal course of business. That's the way Sequoia announced it. But like months ago, they had a deep dive about why they loved FTX on their website. This is Sequoia, kind of the blue chip blue blood of venture capital. So this runs pretty deep, and it'll shake, it'll shake a lot of things, and it'll create a lot of regulation for innocent bystanders, right? That really want to do something on the blockchain, because we need innovation, right? Apple's kind of, if we look at Apple, they're stifling innovation while the products continue to be amazing. The watch, the phone, all their chips, but the clamp that they have through that phone and the watch is pretty amazing. So you've got that on one end, and then you have blockchain technology, which is really interesting to me around tokens, kind of now taking a shot to the belly, and it'll be very hard to get people to adopt and to take steps seriously. So I think this benefits tech, and that's why tech rallied off this crypto thing. This is kind of one of the other things besides the CPI number and the oversold nature of it. So we'll see if it continues. Would the biotech strong, Ivan? Because I know they had kind of
they're starting to recover. I mean, already above the 200-day. They close above the 200-day, so definitely some potential here. Yeah. And IBB, the large cap, is doing a little bit better, obviously thanks to Amgen at all-time highs. Biogen is also
the market
doing relatively well.
I'll tell you what, the Dow's not very far from all-time highs.
Oh yeah, 7-8% only.
Back above its 200-day.
Let's see, 8.6% from its.
And that's without Exxon, right? So if
exactly.
If you had Exxon there or whatever they replaced, the stocks,
CRM. So it probably would have been at near all-time highs with Exxon. Yeah.
So just that simple change with the Dow would be at all-time highs. So one of the weirdest bear markets, ever, because the industrials are basically at all-time high. Swapping Salesforce. They added tech, right at the wrong time, right as industrials take off. So yeah, you have this really weird market where, and that just goes to show you guys like me who have been riding a tech trend for 10 years. When trends end, they're just devastating, no matter how careful you are. And but the money does not want to come out of the markets, even with rates at 5. So let's take a look at rates.
It's rotating, yes.
Yeah. So again, and then the dollar, you'd want to see the dollar start craving, which it started to do.
It is pretty
so that was another
down week. Yeah,
that was another reason. We've been talking about the dollar being strong. That was a big move down in the dollar for a week, and that might have helped tech stocks as well. So you've got companies getting religion, they're letting go people. You have dollar finally weakening. You have rates. There's a lot of speculation that rates kind of are topping out, at least short term here. And so the rally can continue. Just know your levels.
Yeah, absolutely.
Think about repositioning your portfolio. Where are you thinking about it this week, Ivan?
I mean, I'm still looking on ideas on the long side, mainly just
some of back above its 200 here.
Yeah, that's what I'm showing you, that one of the worst hit sectors, housing, has been leading since Thursday. So it was housing and ARK, all the stocks that were sectors that were hit the worst are leading. So I continue to be short-term oriented, just looking at short-term opportunities. Yeah. I'm not really thinking 6 or 12 months ahead, just making any longer term investment.
I'm like, there is some reason to look more long, to be engaged here a little bit, but you got to reposition your portfolio too.
I mean, if you do it longer,
tech is a bear market rally for sure. Tech is a bear market.
You need to do it gradually, even if you're buying something like Hood, maybe just do it monthly or something.
No, I was buying it for 6 months. Whacked, and I didn't. I wasn't as bullish as I am. Relatively to where they are in the market. That's scary when you see a 30% drop.
Yeah, in a few days. Yeah.
So there's landmine. This is a landmine market. It is finding your weakness. And what we're seeing with industrial, no one owns them, right? When's the last time people told you their portfolio was allocated to the Dow?
Yeah, they're not sexy companies, but they're doing really well. Look at Caterpillar, almost near. It's almost 52 highs, almost all-time highs.
Yeah. So, all right, buddy. Have a great week.
All right, Howard. See you next week.
See you, everybody.